In here. Let's get it going. Thank you all for joining another episode of Crypto After Dark, Constant Collab. It's really exciting to be back on the set for lack of a better words, and I really appreciate my stepmom and her colleagues for allowing me to use her office as well. I continue to visit friends and family, so hopefully you've had a chance to enjoy holidays with your friends and family as well. Hopefully y'all can hear me as well. I've had no ability to test my mic here. I continue to visit friends. Let me just hear myself real quick. Hopefully, had a chance. Y'all can hear me as well. I've had no ability to test my mic here. Sounds pretty good. Sounds pretty good. Thank you for bearing with my little personal mic check there. But again, it's great to be with all of you on this episode. And as I was getting to, hopefully you had a chance to enjoy some time with your friends and family over the holidays. Whatever holiday you're celebrating, happy holidays to you, and happy New Year as we approach the new year. Tonight, I want to talk about a couple of different things across the marketplace. Right? There's been a lot of talk about positive and both negative. Positive and negative, I guess, sort of aspects to what to expect in Q1. So we'll talk more about what to expect in Q1. We're going to talk about PwC a little bit. We'll talk about some of the news responding from the Federal Reserve and what to expect in response from there for upcoming tapering. And we'll talk about what tapering is a little bit. We'll talk about the SEC and some other news across the area. I'll try to get to a little bit more news this week as well, since we will not be having any episodes of the lunch hour. Okay, so getting into it here. Oh no, that's not what I wanted to happen. We're gonna have to go live into there we go. I don't know why that wasn't working before, but anyway, let's hop into some charts here. So this is the Bitcoin chart. For those of you who have been paying attention to the Bitcoin price over the last couple of days and weeks, we had a sharp pullback over the last couple of weeks here where Bitcoin then touched the 42,000 region. It seems to be holding here as well. And I'm zooming out here. This is a weekly chart, but I'm zooming out here to show what that sort of looks like here. But as you get into these lower time frames here we're on the 4-hour. You can see how these trends were respected and broken, and now it's sort of pointing down back to this 48,000 region as well. As of current, right? This is now Monday night. XRP is dipping hard back down to 89 cents. Good chance it could keep going back down to the 79-cent range. So yeah, a lot of the alts are taking a quick bath tonight. Not sure what to expect there. For those of you who follow the blockchain backer, he has been warning about the fact that this bull run could be done for a while. But he has been hinting at the alts sort of making that final push, or the alt run that we've been expecting, especially given that many assets like XRP never really had their full run. Now, will we get it or will we not? I don't really like getting into predictions, but that's just something that folks have been watching as you look at these charts, right? So we're definitely seeing some bearish activity heading into this final week or these last couple of days of the year as we enter the new year. Cardano, we're going to talk about a little bit tonight. Cardano had been making a push as well, but seems to be pulling back as well. There are some averages in some different areas that are holding better than others here. I'm noticing now that you all can't see the price on the screen here. Let me just pull this out here. You guys are seeing some live editing there. There you go. So there's some pricing there on the screen. 148 is the current price for Cardano. I think it could, again, see this retest of this 123 region before trying to go up further. And if we are in a bear market, obviously I think these lower ends will keep riding down. It is very hard to tell. If we all knew what was going to happen, I think we'd all make better decisions all the time. But as you're reading things across the internet and seeing up and down talks of what to expect, certainly wanted to make sure caution is known, or at least aware of what to expect if you see some downside. So that was a quick look at the charts here. Looking at CoinMarketCap, the top 10 hasn't really changed too much. I will say dominance is threatening to go down more. So if we look at Bitcoin dominance one more time here, some folks think this 40% range might hold. It seems to be holding well in the 4-hour here, but others think we're going to break down and lose dominance here and catch lower numbers from a dominance perspective. So that's just one thing to consider as we move forward into this week as well. Okay, moving on here. Wanted to talk about the Sandbox. I know we've been talking about the Sandbox a lot. Snoop Dogg has been making big scenes in the Sandbox and creating that buzz and that hype that everybody's sort of been grabbing at in the different metaverses, so to speak. Last week, I don't know if we've done a show since then, but last week wanted to point out that the Sandbox in Hong Kong announced that they are going to publicly enter the Sandbox. So PwC, which is a global network of firms in 156 countries with more than 295,000 employees, delivering a variety of services, they've acquired land in the Sandbox. Their partner, William Gee, commented that the Metaverse offers new possibilities for organizations to create value through innovative business models, as well as introducing new ways to engage with their customers and communities. We will leverage our expertise to advise clients who wish to embrace the Metaverse on the full range of challenges presented by this emerging global digital phenomenon. So I think this is big news. Again, not, big is a relative term, but as it relates to adoption into these different metaverses and what we're experiencing, no, let's do that tomorrow. Having a firm of this caliber participate in this metaverse is very big for all of the metaverse development, and it shows the competition is healthy and brewing. I think certainly investors in sand or property owners in sand are happy about this, as you could imagine that customers of PwC may be trying to engage in metaverse type experiences as a company. What if meeting places of the future are these so-called blockchain or these so-called metaverse conference rooms, right? You have an avatar, you go into a meeting just like any other meeting at work, except this time you're a virtual avatar and you can interact and communicate with your Oculus headsets or whatever. That's where I think this is heading. So this news is impactful. I'm interested to see how its clients and other big accounting firms and other metaverses respond to this partnership. And I thought this piece was really interesting, so I wanted to point that out to you all. So moving on here, I wanted to talk very briefly about Fed tapering. And so you may be wondering oh no, this is a bad article. That's old. I saw some CNBC article earlier, and I guess I've lost it. But anyway, Fed tapering refers to the idea that the United States, or the Federal Reserve, is going to stop purchasing assets or bonds or what the vehicles that they're purchasing at a significant rate that they have been during these stimulus periods. So their tapering refers to the reduced acceleration of those purchasing or expansion of their balance sheet. Now, with that being said, their timetables and their language behind this execution can be a little bit cloudy, and also the market response not only prices in these expectations, but usually doesn't perform the way that you would expect it to or respond to once this news has been committed, because you would think that news like tapering would send the market straight down, but it's clear that some of that news has been priced in. So if we look at this article here, Santa Claus rally, what to watch this week. As traders return from the holiday shortened week, the price action heading into the new year will be closely monitored, especially given the relatively light economic data and earnings calendar for the coming days. The S&P 500 is entering the period known for ushering in the so-called Santa Claus rally, or seasonally strong time frame for stocks at the end of each year. The term, coined by Stock Traders Almanac in the 1970s, encompasses the final 5 trading days of the year and first 2 sessions of the new year. This year, that Santa Claus rally window is set to start on Monday the 27th, and the latest Santa Claus rally has started in 11 years due to the timing of the holidays. According to data from LPL Financial, the Santa Claus rally period encapsulates the 7 days most likely to be higher in any given year. Since 1950, the Santa Claus rally has produced a positive return for the S&P 500 78.9% of the time, with an average return of 1.33%. So investors are expecting the Santa Claus rally. I will also say that as news strengthens that the market should go down, the market could very much go higher. The market is here to destroy you. In a lot of cases, it'll do the opposite of what the majority likes to do. And so that's just something to be considering as we move forward. If you're expecting the market to go down and you're in a big boat there, typically that's a time for it to squeeze higher and to buy those dips. And I think sometimes the downside catalyst can really catch you off guard, and it won't be something as obvious as another variant or something that's been priced in or understood by the market at this stage in the game. Okay. So just wanted to bring up after talking about the Sandbox, just want to bring up the idea that the Fed did make that announcement that last week. I think there is definitely a fundamental catalyst for some market pullbacks when we're not doing any easing, but with inflation and other narratives, it's really hard to tell what's going to happen next. Just trying to keep everybody informed on what I'm seeing and what those feelings are processing as we move forward. Okay. So next article, the SEC spurns crypto industry again, denying 2 spot Bitcoin ETFs. So there were a couple of ETFs, and spot ETFs mean that they're going to be backed by physical Bitcoin. There's been some ETFs that have been said to have been backed by have other financial backings, but these spot ETFs were hoping to have Bitcoin backing the asset values of these ETFs. So regulators rejected a pair of proposals to offer physically backed Bitcoin exchange traded funds, handing crypto enthusiasts a proverbial bag of coal ahead of the Christmas holiday. Excuse me. Juice. The U.S. Securities and Exchange Commission said on Wednesday that the proposals from Valkyrie Investments and Cryptoin failed to meet requirements to prevent fraudulent and manipulative practices that are needed to protect investors. It allowed futures-backed Bitcoin ETFs to be auctioned in October. The earlier than expected decision from the SEC could suggest a 2020 approval for a pure Bitcoin fund may not be in the cards either. The deadline for a decision on the 2 proposals was January 7th, according to Eric Balchunas, a Bloomberg intelligence analyst, who likens the early edict as a Scrooge-jection. The fact that the SEC is disapproving faster than they needed to, we were optimistic about futures, but not confident in a 2020 approval. So launching the first spot Bitcoin ETF remains the holy grail for investment fund providers who see such products as an entryway into crypto for millions of individual investors. I agree with that statement. I feel like the second that we have these opportunities for adoption, it will help significantly for global adoption. I was having some comments about this in the Telegram chat today. You're thinking about Crypto.com Arena and FTX and all of these U.S. Exchanges and institutions that are doing their part to help regular investors or retail investors, get their hands on crypto. But there's not enough juice yet. There's not enough. We've got MicroStrategy, Tesla, we've got, Michael Saylor, El Salvador, but there's not enough. Got Tim Cook saying he owns, but is that, and the athletes, it's not hitting hard enough yet because people aren't excited yet. They don't know what it is. It's almost like they need to be handed some pamphlet or something that says, hey, this is the future, get into it. Tweets from rich people or whatever, it's like, well, they can make the risk or they can take the investment. it's getting harder and harder to sort of make those statements, right? And that's why I try to bring up partnerships and things like that that are helping the market, or helping investor confidence, or helping adoption, or accessibility, or anywhere from Gwyneth Paltrow to you name it. But certainly, I think these ETFs are huge. Investors love ETFs and they love exposure to them. So having one that's backed by Bitcoin would be very helpful for the overall market. All right, so moving on here, I found this article a little bit interesting. Cardano founder Charles Hoskinson lays out 2022 plans. Hoskinson said the creation of a formal open source project structure for Cardano is in the cards, among other developments. So my goal for the second half of 2022 is to figure out how to put all the pieces together to get an end-to-end microfinance transaction on Cardano. The Cardano founder said a structure that oversees the creation of decentralized products on the network would be introduced. A formal open source project structure is going to be formed, kind of like Hyperledger or Linux. Cardano, founded in 2015 and launched in 2017 as an alternative to Ethereum, is a proof-of-stake blockchain that relies on network validators to process transactions for ADA, its native currency, and maintain the network. It is the sixth largest cryptocurrency with a market cap of $51.18 billion at the time of this writing. People have previously complained that Cardano hasn't met its stated goal of being completely decentralized. In 2020, IOG published a paper explaining how it decentralized its block product production, a goal that was reached in April 2021. What else is he saying about 2022? So developers are also working on Cardano improvement proposals, a set of community-governed network enhancements that are slated to go live in 2022. Some of these includes human-readable information for assets issued on Cardano and a native web wallet for interacting with DeFi protocols. That's pretty cool. Hoskinson said a recent testnet rollout would improve the network. Peer-to-peer is currently being tested with the stake pool operators on the testnet, and there's lots of stuff happening there. So I wanted to share this article about Cardano. You can read more about this in Hoskinson's update. I feel like when you're getting any sort of, this is from today, I feel like when you're getting any sort of confirmation at this degree, when you're getting active, transparent visibility from these founders, I think that's usually a good sign. And I think Cardano is doing a good job of understanding its weaknesses by by pointing out some of its intentions here and understanding what it needs to do to be a competitor with not only Ethereum but maybe with XRP and other I mentioned transactions there. If it wants to be in the payment space, it's certainly going to have to be considering that as well, and it's an eye opener for Cardano to keep up with not only Ethereum but other marketplaces to make sure they're grabbing as much market share as possible. I think if I'm going to have a strong opinion on something, I'm a big believer that only 10 or 20 cryptocurrencies will truly remain at the end of this. Again, we have 16. You can't see the top of that article, the top of this webpage. But there are 16,000 cryptocurrencies on the market. There you go, right there. So with that being said, I think it's important to understand that not all of them are going to make it. And, we can't just have 16,000 cryptocurrencies making it and providing utility in the open market. Okay? So some other news, and I had a buddy of mine ask me about miners. I'll give my opinion on miners in a second as well. Iran orders crypto miners to halt operations to prevent winter blackouts, and I'm pretty sure they halted operations in the summer to preserve energy as well. So this is a big narrative against mining, okay? Authorities in Iran have told licensed miners to suspend their activities in the face of electricity shortages during cold winter months. Following a period of similar restrictions this past summer, authorized companies were allowed to resume mining in September. So, expecting energy needs across the country to increase with low temperatures in the coming months, the Iranian government is now taking steps to limit consumption and avoid an electricity deficit. Just like earlier this year, the measures will affect the country's growing crypto mining industry. So, somebody asked me, have I gotten involved with mining? I've never found mining very attractive, and once you realize that there's these other projects like Cardano or XRP or VeChain that aren't doing any mining, but are, doing, just have these set supplies. I just don't see mining as a sexy thing. I don't know why. That's just a personal opinion. But that being said, I think obviously the large-scale mining companies and those with the access to that technology have been doing very well. It just becomes more challenging when you are not in a proper demographic like Iran, or when you're dealing with global warming headlines or narratives and things of that nature. It becomes increasingly more difficult to get into this space and sustain yourself when you're being, shut down all the time. Okay. This is not the first time this year licensed Iranian miners have been asked to shut down their equipment. In May, authorities in Tehran announced a temporary ban on crypto mining amid growing demand for electricity and insufficient supply caused by the hot and dry weather. So it can be cold, it can be hot, it can be whatever. If there's an energy need, the miners are going to be shut down. And Tavernier, who is the, prime minister, Tavernier, the Iran power generation. They've been going after underground mining facilities this year. Media reports in November revealed the state-controlled utility had confiscated over 22,000 mining machines and shut down close to 6,000 illegal crypto farms across the country. So Iran is not the place to be starting any Bitcoin mining. So Binance gets its first Gulf regulatory nod in Bahrain. So I believe it's referring to the Persian Gulf, if I'm not mistaken. So Binance gets its first Gulf received in principle approval from Bahrain Central Bank to be a crypto asset service provider in the kingdom, according to a statement from the company. Binance is the world's largest cryptocurrency exchange by trading volume, and it still needs to complete a full application process, but this is good news for Bahrain. If successful, this would mark the first regulatory approval for Binance entity within the Middle East or North Africa. So the exchange has been attempting to expand its regional footprint, particularly in the Gulf, as it prepares to set up a potential headquarters. I'm grateful for the support from the Central Bank of Bahrain and the broader Bahraini ecosystem during the process, says Chairman Zhao of Binance. Changpeng CZ Zhao, Chief Executive Officer. So cool. That's cool adoption news. Just wanted to share that with you all as well. And then real quickly, one more video here. I thought this was interesting. So there's been a lot of craze about NFTs. Investors purchased 330 NFTs using smart contract, 328 more than the cap. So Adidas had released these NFTs, I believe for Decentraland. I believe that's a Decentraland character there. Into the Metaverse with 30,000 pieces on Friday. The sales capped at a maximum of 2 items per person, but one user managed to hoover up 330 pieces. According to Montana Wong, a blockchain engineer, the user made a custom smart contract and deployed it a few hours before the minting. When executed, the contract generated 165 sub-smart contracts, each minting 2 NFTs and transferring them to the owner's main Ethereum address. Since the sub-smart contracts have unique addresses, the creator was able to avoid the 2-item limit imposed by the sale. After sending the NFTs to the creator's main address, the child smart contract would self-destruct. Wow. Sophisticated. So they paid 27.3 Ethereum, 103,000 in gas fees, and 251 for the NFTs. So they're profiting good money off of this. Interesting. So you get, NFTs have been very popular. Wearables have been popular. Gucci's making stores. Everybody's sort of making stores and stuff. So this has been really popular news, and I think this news could certainly continue. That being said, you certainly don't like to see somebody scamming the system. That's going to happen. I think that's very creative of this person to get around it this way. And it'll be interested to see what these wearables keep going for, right? I think it set us up to 0.8 ETH right now. So good profit for that individual so far. So yeah, that's all I really had for you all today. I wanted to just get back in the swing of things. I know it's sort of difficult to do sometimes after the holidays, and I hope everybody has had a great holiday here. I'm going to continue to going over the charts for the rest of this week as well. I'd like to go into more educational-based things as well. So if you'd like to explain things more basically, like Bitcoin, Ethereum, anything like that, let me know. Happy to talk about other things as well, but certainly want to keep up with the potential altcoin run and what to expect as we move forward. But with that being said, thank you all again for joining another episode of Crypto After Dark, and we will catch you all next time. See ya.